as you can see in the title, I'm going to be talking about Fibonacci. So I'm going to be dealing with Fibonacci levels. And also, basically, is this going to be the beginning of another bull run or an extension of the bull run that we've been in for, since the bottom of COVID, when we started, with the stimulus packages? Or are we going to get a reversal or continuance of a reversal at these Fibonacci levels? So I ain't going to keep you too long tonight. We're going to go ahead and get to the charts, and then I'll show you how I use Fibonacci, and maybe you guys so let's see. Let's share this screen, and then we'll see what we're working with. If I can get everything, just bear with me. I'll get my chart up here. And as soon as I can get my Thinkorswim chart up, and I can't get it up. Let's see. No pun intended. I do not see it up here, even though I got it up. This is gonna be, I gotta get this down. Just bear with me. Let's see what we got. I'm gonna move this over here. Let's see. There it go. Share. All right, guys. Working now. All right. Fibonacci levels. So what I'm gonna do, I already got them drawn here, but I'm gonna draw them from scratch. And then that way you guys can see, you can do it on your own. I got a basic chart up. This is the Thinkorswim platform that I'm using. Most of the time I use Tastyworks, but Tastyworks doesn't have the Fibonacci extension. They only have the retracement. And I like to use the extension to project take profit levels. And generally what I do on my charts is right here. This is the bottom. All I'm doing is making this big so you can see it. This is the low back on March 23rd. And this was right when COVID hit its low point, 2174. These are the S&P 500 futures. The futures market is actually going right now. And you can see right now we're down about 3 handles on the S&P 500 futures. So all I do, I'm going to take this off and then let you guys see me do it. I go from the low. It's going to be 3 points on here. I go from the low, 2174. I find right around in here. And I click to like the second point is like your midpoint, like your high. And then you come back down and find you another low. So all I did was go low, high, low, and it automatically projects these measurements up there. So let's look at these measurements. Anywhere you see with a line that you see right here with a 61.8, you see the market reacted right here. You got a long wick candle. And when I say long wick, I'm just looking at this candle right here. This is a wick. And then this square part, this is the body part. And so you can see the market close below right here. This is a moving average. I like to use the Wilder's moving average. You'll see that on just about all of my charts. And the math, you can Google the formula for it on how he came up with it. And so what you'll see is then it came back up to the 100%. So basically 100%, what that means is from here to here equals from here to here. So that would be, so basically A, B equals C, D. So this, from this bottom to this top equal this bottom to this top, right at 100. And you can see it created a low level that the market stayed at. And then you got another move to the 1618. And the next one was 2618. right here. You can see where the market went right there. These are all levels where, if you were in it, maybe you could have took profit, or you could have kept going, just been holding all of that time. That's up to you. But what I'm curious about, that last level was right here. And you can see last week when it hit, or maybe not last week, 2 weeks ago, when it hit right here, then it started to go down. We got 100-point decline from that high right there to right here to the low. And then after that, last week, we got one day up, another day up, another day up, another day up, 4 straight days up. So basically, are we going to start another way, another move, another impulse move from here? Or is this the beginning of something where we get some chop right here and get another down move? I personally think that we're going to get some chop up here and get another down move. Now, you might say, well, why are you looking at just the S&P 500 futures as far as how you would make your determination for the whole market? And that's because the S&P 500 got for the most part, the 500 most liquid stocks, the 500 most, or the 500 stocks that are the largest stocks for the most part in the New York Stock Exchange. That's not 100% accurate. You'll have some stocks, some newer stocks that may not be in the S&P 500. That's not as liquid, or maybe a little bit bigger, but that's for the most part, that'll give you your largest average of your largest representation of the overall market. You'll see on CNBC and some of these other places they'll be talking about the Dow, but the Dow only has 30 stocks in it. So the NASDAQ got 100, and it's mostly tech stocks. But looking at the whole market, you would look at the S&P 500. It's going to give you 500 stocks. I could come up here and go to, let's see, Market Watch. And if I came to Market Watch, and let's see how I would do this. If I came to Market Watch and I hit visualize, and I'm trying to think what's the best way to show this to you. Index watch, select the watch list, and then I'm going to find the S&P 500 right here. And here they go. And we go 1 through 50, and you can see that number 1, you got, what is that? Agilent Technologies or something like that. You got American Airlines. There's Apple. And that's because I got it in alphabetical order. But you can rearrange it and then put it by like market cap, and you will see that the larger market caps like Apple, Amazon, Microsoft, let's see, Facebook, you'll see they're all. Let me see if I can go ahead and put that on here for you just to show it to you. You'll be able to see. Let's see. I'm gonna put it in just so you guys can see S&P 500. So I got them right there. I'm gonna change one of these headers up here. I'm gonna customize it, and then I'm gonna see if I can find market cap. Let's see. I see market cap, common equity market cap right here. So I'm gonna add that, bring it up here to the front. Now you see market cap right here. I should have took that quote right now. Now I'm gonna put it and arrange it. I don't know why this Flare Systems is up there. It says NA, so that's probably like a little float. So you can see that if we arrange it by market cap, you got Apple, Microsoft, Google, Amazon, Google, and Facebook, Berkshire Hathaway, Tesla, Visa, Nvidia, Johnson Johnson. These are your largest stocks. These are the largest stocks out there. So, And this is how, and this is the reason why I use the S&P 500 as a to kind of look and gauge if the market is going, where the market is going overall. If you pretty much, if Apple is falling and everything else is falling, you know, your our 401ks, our retirements and stuff like that all have a little bit of probably some Apple in it, or some Google, or some probably some SPY ETF or something like that. So basically what I think is going to happen, which I don't know anything, so don't make any trades based off of what I say. Trade your money at your own risk. Add that disclaimer, but I do think we're going to get some chop around here, and we maybe even get a down move, maybe, you know, sometime this week, get a little pullback. We need like probably like a catalyst or something to make it go down. Some news. I know they're supposed to be renegotiating like the debt ceiling and some of that stuff going on in the government. But I'm anxious to see how this video comes out. See how, whether I want to go back to the way I used to do it or not. But leave comments in the comment section on some things that you guys want me to go over. I'm just going over, you know, I just plan to go over this little Fibonacci chart and basically, you know, talk about some, you know, a market high. I think we do for, you know, a little a retracement. And so basically what you want to look for up here is you want to see, if you're like me, who's I actually wouldn't mind having a down move, makes for a healthy market. Because the longer it goes up and continuously goes up, that's why when it comes down, it crashes down so fast. You know, you want to see you want to see something come down into here and then pull back and get a down move into here. And then that'll give you an opportunity to buy some more. You know, you want to buy when the market is down. It's kind of hard to buy it up here, because then that means you got to sit through the down, you know, through all the down move, you got to hold. Another thing that I like to look at when I want to buy or get long a stock, or I want to be bullish. And now here's the freezing. It's one of the reasons why I really don't trade with Thinkorswim anymore. I might come on here and do some charting, but I do all of my trading and Tastyworks just because of the freezing. Yeah, like my screen is frozen right now, so I'm just waiting on it. There you go. It's gonna give me a error. All right, let's see. So I like to use my RSI right here. So I like to buy like down here on this RSI. I like to see the RSI come down below 50. Right? You can see like right here on this little dip or whatnot, the RSI. And look over here. You'll see what the numbers are on when I pull over here. See it? It was at 45 right here. That's a buy, you know, anytime anywhere below 50, or as it's crossing 50 coming up. And it will be crossing 50 on the RSI coming up right here. When it's crossing over the wildest moving average, that'll put you like right around the range where it will be crossing over 50. And then that's where I like to get long. And you can scan for that also in the Thinkorswim platform. I will subscribe. Like I said, make sure you guys subscribe and hit the like button, because I will be going over ways how to scan. I'll do a video how I scan for trades. So basically, you don't have to come through here and look through these stocks. You can program the system to just scan for you and give you trade opportunities, like the stuff I just said about being below 50 or crossing over 50. I can scan for that, and then the system will alert me on my phone or and by email when stocks hit that area, and then all I got to do is go in and then just put my trade on. So that's something that, you know, that's easy, that you don't have to be sitting around trying to manually do yourself. So I think that's the next video. I may do that video late tonight, and then I probably won't go live with it. I'll just record it, and then I'll put it on. And then that's something I'll show you how to scan for your own setups, for your own stocks. Even if you just want to buy stocks, I'm mainly an option trader. But if you just want to buy stocks to buy and hold, I'll show you a scan to do that too. So you get the perfect place on right where, for you anyway. That's still, like I said, that everybody wants the holy grail. There's no guarantee in anything. So I don't want to make that guarantee that you're going to make money if you do that. But because, for legal reasons, you can't. But for the most part, you can set it up for when it crosses over. And just when you go back and look at, if you just look at, like, you can set it to wherever the market, whenever a stock crosses this line, you can set it to alert you. So if you set it to alert you whenever it crosses, I'm talking about this wildest moving average, this white line right here. And all trading platforms pretty much have that. Even if they don't have that, I'll show you. I know how to put it in manually. I know the regular moving average that will equate to that. So when it crosses over right here, you'll get an email. Now let's say you just bought the stock right here, and it will alert you when it closes below it. These went down below it, but they didn't close the day below it. They wicked and then stayed above. So you probably would have gotten alerted to get out right here. So you would have been in from here, which is 2754, and you would have been out at 3006, about 225 points. So that's good money. And on the S&P 500, that's big money. Every tick is $12.50. A whole handle or a whole point is $50. So if it's 200 points or 200 handles, you would do 200 times 50, and that's how much you would make. That's on the futures product. It would be the same thing like on the stock. It would be like dollars, dollar movement. So I hope you guys got something out of this video. Fibonacci levels or new bull run. I'll let you decide, but I'm going that it's gonna respect this level, and we're gonna get some sideways action, maybe a little down move, either later this week or next week. So I'm gonna be looking to capitalize on some short positions if I can, and then if we get down here somewhere, I may look to buy some options to get long again. So with that, I'm gonna go ahead and let you guys go. Be on the lookout for that. Hit that like button, hit the subscribe button, and then be on the lookout for another video on scanning. I'll put something out. I'll make some scans for you guys, some easy scans that you can either copy what I do on the screen and you can put them in yourself, or you can just look for them and on your whatever platform you use, and you can do them manually. So I thank you for your time. Put something in the comments. Let me know if what you want to see next time. Peace.